Good evening. Welcome to the ShadowTrader video weekly for Sunday, July 22nd, 2007. Very ugly day on Friday here in the S&P and the broad markets. It was an options expiry Friday, and it was quite interesting because we had volatility pretty much all day long, whereas usually on an options expiry Friday we get a little bit of volatility in the morning session, but in the afternoon session tends to level off very flat as certain stocks, or most stocks I should say, get pinned, to option prices on that Friday afternoon. But this particular Friday was different. It was a lot of sharp move to the downside, and then you had a kind of a Fibonacci retracement bounce, and then we sold off into the close, which in and of itself is considered relatively bearish. Basically, whenever they're selling into the close, that usually means you should move at least somewhat lower in the next couple of sessions. If we look on the daily chart of the S&P here, nothing's really damaged per se, but I think it was definitely a little bit of selling that was surprising to everybody. Nobody expected that we'd move down that sharply. We do have trendline support here, and right here at this area is where I want everybody to focus their attention on, because a lot is going on over this coming week in this 1520 area in the markets. Not only that trend line, but let me put together the rest of these here. Okay, I'm going to put this right about here, like that. Okay, now notice here, this was the resistant level here, and you want to be looking at this box right here in the prices. This was the resistant level here at 1533 when the market broke out mid-July, right? And now we've sold off back to it. So from a technical analysis standpoint, this backside of the trend line, as they call it at the top, should be support. So it's going to be very interesting as the market probably sells off a little more into the 1520 to 1530 area, see if this area holds. Not only because it's the backside of the trend line, it's also the front side of this trend line. This would be the front side, right? The part that's supporting, and over here would be the backside underneath it. Also this, and also you have key moving average support. The green is the 20, the red is the 50. Period moving average, simple. I don't use exponentials, I just use simples. And that's also right there. So I think over the coming week in the markets, it's going to be interesting to see if we're probably going to test this area, but if we bounce hard and continue back this upswing, or if we fall down below that area. If we do fall down below the 1520, I would have to change my stance at least to sideways, maybe not so bullish, maybe not flat out bearish, but I would go to more of a neutral stance on the markets, only because I think that we will, quote unquote, fill up the triangle, as I say it. When you have this pattern here and then you break here, what happens is you'll usually get a free fall into this area. I call it filling up the triangle. So that's the S&P. On the dailies, if we look on the bigger picture in the weeklies, obviously still intact. I mean, there's really nothing. One day down does not a bear market make, obviously. I just think it was, a little bit surprising that we took back a lot of this previous up move, as you can see here. If you look on your 60-minute charts right here, right, this is a phenomenon that I talk about all the time. I call it straight up offers no support on the way down, right? And this is what I call straight up parabolic move here, right? So if and when the markets sell off through this support level and we break 1530 again, there's still a little bit of froth here that really won't support the markets until this area here, where the next cluster was. I call this a cluster pivot, where prices kind of jogged around for at least a day, right? This is an hourly chart, so these are all hourly bars, okay? Plus you got a 200 period moving average hourly right here at 1523, so that's probably your next near-term target, and look where it matches up, almost at the bottom of this run, almost right there. Okay, moving on to the Dow. Obviously a little bit of bearish engulfment on the dailies, but there's still a lot of distance between where the Dow is here and the top of the trend line, so that also could be a free-for-all. And more importantly, the Dow is definitely using that straight up no resistant area, no support area, right? Look at the 60 on the Dow, right? It's a lot of area here. There's a few hundred points here if we were to lose this area, right, where the Dow could free fall into its 200 period moving average on the 60. All right, now the NASDAQ composite obviously has been making leaps and bounds recently and was breaking out first ahead of the indices, so it's in a little bit better shape. However, same thing, if you look on the hourly, there's still some action here. There could be a gap fill. Right? Russell, which we've been talking about in our newsletter, more on that later, really was weak on Friday. There was definitely some relative weakness on the Russell. Look here. Let me move this over. See these numbers here? And then look at this number here on the Russell. See this number right here? It's a percentage change. You can see how the Russell was showing a lot of relative weakness. Oop, move that back over. So the Russell was really weak on Friday and has come back to its ascending trend line here on support. And you can see that the weekly on the Russell is a lot weaker, basically. It's a weaker weekly than you have on the other indices, as this weekly candle is not pressing as far down into the others. So small caps may be correcting here. If we start to close on the Russell below this area, then it could create somewhat of a rounded top. Maybe the Russell moves down to 800. And those of you that are IWM players, which is the ETF that tracks the Russell, there may be a play to the short side for you there. All right, let's take a look at the markets according to the overall volume matrix. Those of you joining us for the first time, it's just a quick bird's eye view from the top of what the markets did, Dow, NASDAQ, and S&P, and then down here, these are increases or decreases in overall volume to see if we had some accumulation or distribution in the markets. The thing we want to be most concerned with is when we see the letter D pop up, because it means that the markets went down and overall volume increased. We got that action on Wednesday, which was kind of foreshadowing Friday, which was the big down day. Thursday was an up day, but look, volume fell off actually in the NYSE flat on the NASDAQ. We had a little bit of accumulation here on the Dow, but I didn't really give it an A because it was only a small increase, and the Dow was only up 20, which is nothing. And this day I didn't really give it a D for distribution. However, it pretty much was distribution. But remember, on options expiry Fridays, overall volume always increases greatly. There's always a big surge of volume in the morning session usually. So something to think about there. So I didn't really give it a D for distribution, but there was some selling on Friday and also on Wednesday, and we saw 2 days where overall volume did go up, and the volume did not rebound on an up day here on Thursday, so that is considered somewhat bearish. All right, let's end on a brief note of looking at what I call the 4 horsemen. Research in motion, Apple, Google, and Amazon. Let's start with Google. Google basically was the reason why the market sold off heavy on Friday. On Thursday night, there were reports of earnings from Microsoft and Google. Google missed by like 3 cents. Revenues were up strongly, however, but the market did not like it at all. Market was not happy with the Google numbers. Sold off heavy, opened up on the 50 MA, and then spent the rest of the day rebounding slowly, just creeping up. Obviously, there was a lot of volume traded, 17 million. If the next few days in Google are bearish, it would be indicative of rollover. And obviously, anything below this 509.50, which was Friday's low, could be a swing short, as the stock probably from there moves down to the 500 level to test this psychological. But I would wait for confirmation to see a break of Friday's lows, and also how the stock acts over the next few days. If you start to see dojis, which look like these here, small body candles going sideways, it'll be indicative that the stock is, that basically supply is continuing to overtake demand, and the stock just can't seem to rally. If we do move over Friday's close, then the odds are stronger that we would start little by little to fill up this gap here and possibly kiss the backside of the channel. Apple surprised everybody on Friday, continuing to run. We recommended this stock a while ago in our newsletter. It continues to be extremely strong, absolutely on fire, completely bucking the trend in terms of what the market was doing Friday. Obviously, its earnings, I believe, are coming out on the 25th. Don't quote me on that, but I'm pretty sure it's coming up this week, so the stock may be running into earnings. Amazon also fell apart on Friday, but not so bad. Rebounded a little bit, but I like the way the daily is looking. This is kind of a do or die situation. If we move below here, then it's no longer in play, but if Amazon holds the trend line, it should be fine. And research in motion, still looking good, I think. And the only reason I'm pulling up these specifically is because these are the ones that I call the quote-unquote 4 horsemen, and they seem to be leading this market. They're the hot stocks that everybody's talking about, and I'm very much of the opinion that if the market's going to fail big time, all of these would be failing. Now, maybe some of them, like Apple, are just waiting for their numbers to come out, and then they may back off a little bit. I don't know. But when we see all of these break trend, and right now really only Google has fallen down, and Amazon is maybe going to fall down, is about to. Obviously, Apple's really strong, and research in motion is still strong, right? If we see all 4 of these start to break down below trend lines, that will also signal a possible end to all the bullish action, and we may be looking at a more sideways to down late summer, early fall. All right? That's all the time we have for today. Again, SPX, very important. Keep an eye in the coming week on this area here, right at your trend line support. Watch the 1520 to 1530, right? And I think it's going to be very, very key how the market acts right in this little pocket, right in here. All right, on behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course all the good people in Chicago, Illinois at Think or Swim, I wish you good trading and good night.